Could India be the next China in terms of investment opportunities? An intriguing question to ponder upon. Lately, there's been a noteworthy shift in the global investment landscape. Increasingly, Japanese retail investors are turning their attention, and their yen, towards the Indian stock market. This trend is driven by a multitude of factors. At the heart of this shift is India's vibrant economy, which is growing at an impressive pace. This economic growth is fueled by technological advancements that are reshaping industries and creating new ones. More and more investors are recognizing the potential of India's tech sector, with its budding startups and innovative solutions. Beyond the allure of economic growth and technological innovation, there's the regulatory environment. India's regulatory framework has been increasingly favorable to foreign investors, offering a level of stability and predictability that investors find reassuring. But to truly understand this shift, we must first understand the investment landscape in Japan. So, what is driving Japanese investors to look towards India? This question begs a closer look at the current state of Japan's financial landscape. Japan, the third largest economy in the world, is home to a mature and sophisticated investment scene. However, its domestic market has been grappling with a unique set of challenges. The country's interest rates have been hovering around zero, and even dipping into negative territory for quite some time. This scenario, although designed to spur economic activity, leaves little room for investors to reap substantial returns domestically. Another key factor shaping Japan's investment behavior is its demographic profile. Japan is home to one of the world's oldest populations, with nearly a third of its citizens aged 65 or older. This aging demographic has led to a shift towards a more conservative investment approach, as the older population tends to prioritize security over high returns. However, the quest for financial growth and profitability never ceases. The need for diversification and higher returns is compelling Japanese investors to cast their nets wider. They are increasingly exploring foreign markets, seeking opportunities that can offer lucrative yields and a hedge against the low interest rate environment at home. Among the myriad of global markets, one particular nation has caught the attention of Japanese investors: India. The South Asian giant, with its booming economy and burgeoning middle class, presents a stark contrast to the low-growth scenario back home. Its young population, rapid urbanization, and a government that is keen on implementing business-friendly reforms make it a highly attractive destination for foreign capital. This is not to suggest that investing in India is without risks. Like any emerging market, it comes with its own set of challenges. However, the potential rewards seem to outweigh the risks, at least in the eyes of Japanese investors. With domestic opportunities dwindling, India has emerged as a promising prospect for these investors. But why India? What makes it a potential successor to China in the eyes of the investors? Let's answer that by looking at several key factors that are making India an attractive investment destination. To start off, India has a demographic advantage. It's a young nation, with more than half of its 1.3 billion population under the age of 30. This youthful workforce is not just massive in scale, but it's also increasingly well-educated and tech-savvy. Next, we have the growing middle class. As India's economy evolves, the middle class is expanding rapidly, leading to a surge in consumer spending. This is a boon for industries ranging from retail and e-commerce to real estate and infrastructure. And then there's the surge in digital adoption. From remote villages to bustling cities, digital technology is transforming how India lives, works, and does business. The number of internet users in India is expected to reach nearly 1 billion by the end of this decade. This digital revolution is opening up a wealth of opportunities for businesses and investors alike. Of course, we can't overlook the role of the government. India's pro-business policies, such as the Make in India initiative and various tax reforms, have made it easier for both domestic and foreign companies to do business. This encouraging environment has led to a surge in entrepreneurship and innovation, further boosting the economy. In terms of economic growth, India is also outpacing many of its peers. Despite the global economic slowdown, India's economy is expected to grow at a rate of over 7% in the coming years. This high growth rate, combined with the potential for significant returns on investment, is another major draw for investors. Clearly, India's burgeoning market holds a promise that few other countries can match. This surge in foreign investment is more than just a vote of confidence in India's potential. It has far-reaching implications. Imagine a ripple effect. The investments pouring in from Japan are like a stone thrown into a pond. The ripples? Those are the effects on India's economy. The initial splash, the first ripple, that's the immediate boost to the financial markets. Increased liquidity, healthier balance sheets, and a more vibrant stock exchange are all on the horizon. The next ripple, job creation. As Japanese companies increase their footprint in India, they'll need local talent. This could lead to a surge in job opportunities, fostering employment growth across various sectors. The final ripple, and perhaps the most impactful, is the potential for sustained economic growth. With a stronger financial market and increasing employment, India's economy could see an upswing. But let's not forget, every ripple has its challenges. Navigating regulatory hurdles, managing increased foreign influence, and ensuring sustainable growth will be a delicate balancing act. Indeed, if managed well, this new wave of investment could herald a golden era for India's economy. So as we look towards the future, what can we expect? We're on the cusp of a potential paradigm shift in global investment. What we're seeing, this shift of capital from Japan to India, could very well be a precursor to a larger global trend. As more investors recognize the potential of emerging markets, we could see a significant reallocation of global capital. Just imagine the ripple effects this could set off. If other countries follow Japan's lead, we could see a surge of investment into India and other emerging markets. It's an exciting possibility that could translate into robust economic growth and development for these nations. But it's not just about India. This could be a wake-up call for other emerging markets to step up their game, to make themselves more attractive to international investors. The potential implications are far-reaching. Only time will tell if India will indeed be the next China. But one thing is clear, the global investment landscape is shifting, and it is a change we all need to watch closely.